Hi there, traders. This is Brad Gilbert with today's trading action. All right, the calm before the storm, right? We've got the US CPI numbers, but I think unlike previous CPI numbers, I don't think we were in for much of a storm unless we got significantly weak numbers. Now, most of these instruments, right? The dollar index just drifting sideways, broke through resistance. Everything looks very similar, except dollar yen starting to roll over. I think the big opportunity will be weaker numbers, and we will see the dollar sort of go lower. But at the moment, dollar CAD is getting pushed to the top side as oil falls to 66 bucks. It's down like 14 or 15 bucks in just over a week, oil. So that's definitely going to put a sour note on dollar CAD. Now, with euro, sterling, Aussie, and Kiwi all trading very similar and just behaving themselves, waiting for the numbers. Now, the market's been turned over a couple of times, right? US dollar short squeeze. And we've seen some false moves over the last week, waiting for this CPI number. So to me, everyone's just having a breather and we're waiting for the numbers. Now, there are some UK numbers coming out today. The danger, or not the danger, I guess the raw side of the market will be really weak numbers, right? You might see sterling drift to the downside. But you know what? When there's a big macro coming out of the US, a lot of the time you don't get much reaction in the UK or Europe on the numbers. Now, let me just scroll this up a little bit because this is obviously the major focus. It's less about what the Fed are going to do. It's more about by how much, right? Looking at this number here, 2.6% is the number we're looking at, 2.4 to 2.7 the range, prior number 2.7, right? So slightly lower inflation year-on-year number than the last month. Well, last report, and that's where the real money is, right? And the real big move, like if it comes out at 2.6, I don't see anything happening. 2.7, maybe the dollar just goes up a fraction. But to me, the big move will be if we get a move below 2.4, right? 2.4, like definitely below 2.4, but say 2.3, right? You're going to see the dollar get hammered. The risk assets will probably get hit because this is the big uncertainty. When central banks cut by 0.5%, it's panic, right? So if we get inflation out of the US at 2.3, I think we should see the dollar initially fall. It may rally as the risk assets get hit, but we'll work that out as we get going. Now that's the danger, right? So you can sort of look at the markets and go, well, what does that really do for us as far as opportunities here? Well, there's a number of them, right? If the US numbers are weak, right? Well, we're going to see retracement here, euro, sterling, Aussie, Kiwi. Okay. Now, that weaker number might counteract a little bit of that dollar CAD move to the top side, but definitely really weak numbers, dollar Swiss and dollar yen, definitely a go-to, right? Because especially sometimes you don't know, because if central bank signals are going to cut by 0.5%, it's a bit of a panic and you can see the risk assets get hit and the dollar almost rally on default. But with dollar Swiss and dollar yen, right, the dollar should come off and there should be a little bit of a push towards the safe havens. So that is a double whammy, right? For dollar Swiss and dollar yen, to me, they are the best looking instruments to be trading on this release. Right. So that's where we are. Now, what I'm talking about is with the Fed, right? 18th of September, the ECB, 96% factored in for Thursday. It's this part over here. This is the unknown. Do the Fed go by 0.5% at the next meeting or do they go by 0.25? If it's a 2.3% inflation, it'll definitely be 0.5. That's where we should see the dollar weakness, right? Now, just to clarify that, as I was sort of talking, you can get a little bit bent out of shape sometimes with how the markets behave. Now, as a cross check, if you are selling dollars on a 0.5% cut prospect, that means we've had inflation numbers at 2.4 or below. Just keep an eye on the yields. Like the yields will go down and they are slightly lower. NASDAQ had a good day. Like the market's giving up some of those returns today. A bit of a sort of slight risk off environment for the Asian session. But what you can do is after the US numbers come out, keep an eye on the yields, keep an eye on this page and see what's going on here. with the US equity futures, right? Now, if you don't have access to those pages, well, you can get them on our website, right? The calendar and the interest rate probabilities, right? Just refresh the page, and you'll get the data. And when we come down to the calendar, right on the time of the release, if you refresh the page, you will get the live numbers there. But the most important thing here is you've got the range, right? And you can keep an eye on that as we go forward. Now, the core number, well, that's a secondary number. It's really this 2.6%, which is the main game, and that's what you need to be focusing on. All right, so plenty to play for. Keep an eye on sterling. Now, with the market sentiment, once again, if you don't have LSEG or Metastock, keep an eye on the equity futures and these yields, right? A little bit of a mixed action there on the treasury yields. So if these yields are going down, right, then equity should be going up. And that means the Aussie, Kiwi, sterling should be going up, right? So let's just see how it plays out. But you can check that out on the site. Of course, if you've already subscribed to Metastock, you'll have our templates and be set to go. I am covering a live session on this one, or intending to. I will be on the road. So for those traders who are planning on trading this, I'll let you know closer to the time of the event. US core inflation numbers, I'm pretty keen to sort of see how this number drops. It does lack the intensity of a lot of the other numbers out in the market, but don't forget, you can also chat to us on Discord and keep up to speed with what's going on. All right, guys, that's it for me. Hopefully I'll see you online if my computer doesn't play up. Let's see how these inflation numbers come out. The markets, you know what? I think they're primed for a move. As I said, especially dollar Swiss, dollar yen. The fact that they are not doing too much at the moment, they're comfortable where they are. Weaker numbers, weaker dollar, slightly stronger numbers. You might see a slightly stronger dollar, but you know what? It doesn't change the central bank cutting rates next week. So we'll see how it plays out. All right, guys, have a good one. All the best. Cheerio.